Good morning, everybody. Let's have a look at just altcoins. We're just going to think about the total two, bit of Bitcoin dominance, and a bit of an overview, rather than focusing on Bitcoin, which is basically sideways, to be honest with you. With a more realistic possibility, it goes sideways and up eventually, but it's sideways. And to be fair, altcoins are the same. So we're going to start on the total two of the 4 hourly, where we had the big breakout, and then we had to move up to 1.53 trillion, and then back down to a 200 simple moving average, golden cross retest basically. A nice bounce from there so far, retested, 3 candles in a row. Had a bounce and pulled back, more or less fannied around this 20 moving average, the center of the Bollinger Band, with a bit of a hidden bearish divergence and back down again. And now we're sort of trying to move back up again. Now, normally, what you'd expect after a golden cross retest is a V-shaped recovery. Normally, that's what you would expect. And to be fair, that's what I'm still expecting. If we look over here at momentum, we can see ever so slightly that we're looking to perhaps maybe on this 4 hourly candle body at the moment break. Again, we're waiting for the candle to close, and obviously wait for momentum to break out as well. But you get the breakout with price action and momentum at the same time, then that normally leads to continuation. So for that, we need to get above 1.43 trillion at the same time as closing above this trend line break, and ideally money flow as well. Ethereum will play a big factor into this, but Ethereum's actually looking relatively good compared to everybody else, really. Ethereum's pretty strong, I would say, but it's not much different to anything else, but it's slightly better than the total two. Let's get back to that total two, shall we? We'll be doing the live stream tonight, obviously on this crummy laptop. So feel free to join the Patreon if you want to be a part of that. Links in the description below. Right, the daily then on the total two. We're slightly, excuse me, above the 21 exponential at the moment. It's a bit. Well, it's not clear. We're above and we're below. We're around. We're side to side really. And for the total two on the daily, you want to get above 1.46. So really, it's neither here nor there. We have not made any sort of major changes on momentum over here. I still prefer the idea of us at least moving up into resistance. Whether we break it or not is a different story, but still looks good to me on the 4 hourly for an attempted move up, and then see if that can take us further. Now, over here on the weekly, slightly different. The weekly is bullish still. We had a pump signal on the weekly that was generated basically on this candle here, and then we got the pump that took us close to the previous local high. Now, because the structure on this chart is a series of higher lows and higher highs over a long period of time, I still expect that between now and September we're going to hit this area and then see what happens after September. I think it's most likely going to consolidate after September. Whether that consolidates into a bear market, that's over a prolonged period of time, or if it just consolidates naturally for a period of months, similar to these ones here, wham and bam, we might have something like that, and then we'll just have to look at it and see. We don't really know exactly how it's going to perform and behave, but my expectation is probably best to think about exiting positions in September and then playing bounces after that, big swing trades like we did in the previous bear market where we did the everything bounce part 1, 2, and 3. They're not really very present, to be honest, on the total two, but we did do some big trades on stocks and on Bitcoin and on altcoins, to be fair. So there's your total two. There's your idea of what is likely to happen in short term and long term. So long term still looks good. Very short term has a realistic possibility of moving up today, to be honest with you. And the daily only to move up into resistance. Bitcoin, again, Bitcoin's at resistance at the moment on the 4 hourly, similar to how it was yesterday. So I'm not really looking for anything special to take place unless we can reclaim moving averages. We do have a death cross and simple moving averages here, giving Bitcoin a big resistance on a 4 hourly of 115,700. So just think about that as we approach it. Just because we approach a resistance doesn't mean you definitely have to get rejected from it, but it is wise to think about resistances as areas to get rejected from, because that's what they stand for. the dominance chart. So this is where things get quite interesting. So we moved up into more or less a death cross retest, rejected from it, moved back down. Now we're getting rejected on the center of a Bollinger Band. So it's kind of like the opposite, really, of the total two, the opposite of the Ethereum chart, which is what you'd expect, to be honest with you. So we are looking for this one to continue to move down in the short term, because that's what this chart reflects. You know, it's a bearish chart on this 4 hourly, rejection and rejection. And if it is a death cross retest, it'll reject to where it came from. So maybe around 60.5% dominance. That's probably the setup that we're looking at here. Over here on the daily, well, there's no fading of momentum, but there is rejection on moving averages. 200 simple, 10 exponential, 7 simple, 21 exponential, all getting rejected from there. And as soon as you close down lower than this previous low, which is 61.36, you'd be looking for that one to get taken out. And maybe at that point we move down to 59. But again, one step at a time. Let's not go too crazy. Now, the Dixie, this is the thing that's, I suppose, everybody's waiting for, whether it's stocks, crypto, everything, everybody's sort of waiting on the Dixie. So we had this slow trend up, we had this big dump, and now we've been flat basically for 3 days straight. If you start closing below 98 and then you're looking for a continuation down, I think we probably are going to have continuation down anyway, because the greater trend is still pointing in that direction. You can see the rejection on the 21 exponential here, and still, yeah, we're sort of above a 10, but I think we're more likely to come back down to retest the 96.5 on the Dixie. So that still gives us time really to expect further moves up across the board for all assets. And speaking of assets, the big one here, the US 500, the S&P basically, trending above all moving averages on the weekly. We are overheated, so I don't think it can get too much higher than this. We're obviously, the RSI is not overbought or anything, but one giant drive of bearish divergence, overheated money flow index read on the weekly, and with that is most likely going to come a bearish divergence on the weekly. A single drive is normally enough to mark a particular top, and you might be pulling back all the way down towards, well, below 6,000, we'll say, basically. Not immediately, but maybe in the next week or two. So, although that we've got those targets in September, reaching a particular peak, you know, the S&P is the governing body of all financial markets. That's how I'd like to interpret it, really. And it is showing signs of peaking soon. You know, maybe within a few weeks, maybe even next week. But again, one step at a time, bit by bit. You can't just make a video every morning and know exactly what's going to happen in a week. You barely know what's going to happen at lunchtime. do you know what I mean? So this is how it presents itself at the moment on the high turn time frames. Is that we're getting close to finding a peak in this market. At least a reasonable peak. That doesn't mean that everything finds a peak, but when everything's so tied in together, we're talking about risk on or risk off assets, aren't we? So, the S&P is generally seen as a risk on asset, but not high risk. It's probably the best chart to ever buy into. And then when people ask me to get into trading or whatever, I say, just start with the S&P. Why don't you just start by buying incrementally into the S&P, bit by bit, week by week, month by month, dollar cost average into the S&P. You're almost certainly not going to lose over time, but there will be days where you'll see pullbacks, and then you'll start to understand what it is to see a portfolio go down, and then you'll see it most likely rebound and go back up, and over the many months and years, you'll see and feel what it's like, and if you want to increase the risk, then move over to something else. But it's still a risk on asset, and it will be vulnerable to a dollar moving up, and obviously it will be subject to a pullback of its own of its own size, which in the S&P's term is going to be relatively tame. But if we were to think about a move into the Bollinger Band, it's 8% move, from where we are right now. If we do make a new high, we're talking roughly about a 10% move. So that for the S&P is relatively big. You don't often get pullbacks of that size, and it looks like we're going to get one, maybe in the next month or so. Do you know what I mean? And so if that's going to happen over here, then you'd assume that Bitcoin might do a 20%, altcoins might do a 30-40%. So again, I still have my same expectations, but There's no point in building a house in the middle of an earthquake, is there? So you do have to think about all of these things. They're completely tied together. Everything is tied in. Just because I have a target of September as a peak in crypto doesn't mean that it can't pull back before then because the ground is shaky. But for the moment, things do look like they still want to move up. But just be prepared. Just literally prepare yourself. Prepare yourself for what could be a bit of an earthquake taking place in the markets. If, of course, the S&P feels like it can't take any more. And look, sometimes you have to accept you might be on borrowed time. If it does pull back though, and you're out of the market, or you've got disposable cash, you've got capital to deploy, then it's great because then you can get in from much lower areas and then trend back up. But all I'm saying is, this very moment on a Wednesday morning, things look okay for immediate continuation. But can I predict or foresee what exactly is going to happen by the end of the day, or tomorrow, or by the weekend? No, not really. This is why you always have to look at the markets constantly, at least in the mornings, like I do, and then usually in the afternoons as well after the markets open in America to have a better understanding of what's going to happen later on that day and so on and so on. But again, just reflecting on how things look in the very short term with 4 hourly charts, as of this very moment in time, they kind of look okay. Okay for an attempt to break those 4 hourly resistances and continue up. But if Ethereum looks that way and the total 2 looks that way and Bitcoin behaves that way, then it will take everything else with it through association. There's only a few coins out there, altcoins out there, that have setups of their own that might outperform these things. And I suppose, we highlighted a handful on the Patreon, and we saw Litecoin doing well as a result. We saw that on Sunday night, and we were like, okay, this is a good setup, and lo and behold, it outperformed the majority of the market. It's pulling back, obviously, but this is what I'm talking about. Looking at these things every day, or we look at them twice a week on the streams, might give you that little bit more understanding than usual as to what a good chart is and why one chart might move in advance of another chart. But even Litecoin itself, it can't avoid a pullback in all markets. If Bitcoin pulls back, it will likely pull back as well. If the S&P pulls back, it will likely pull back as well. So it's, of course, a great chart, but it's vulnerable to the bigger charts that run parallel to it, Anyway, I'm going to leave it with you there. Nothing much more to say. So, long story short, things do look okay on the 4 hourly for a small move up today across the board. But what sort of move? I can't really say. But it's that's the direction it's pointing in, at least for what I would at least say between now and 2:30 when the US stocks open. Right, I'll leave it with you there. Thanks for watching. Hope you have a nice day. Take it easy.